spike in FHA foreclosure starts. It is a case of good news and bad news where foreclosures are concerned, for the month of April. But it's the starting numbers for FHA foreclosures that captures the report released recently by the LPS. While foreclosure initiations increased only a slight bit in April, FHA foreclosures that have begun have shot up significantly. The Lender Processing Services, or LPS, reports that foreclosure starts actually dropped 2.6% in April, but FHA foreclosure starts spiked an incredible 73% during April. The reason given by LPS for this terrible number is being blamed on defaults in 2008 and 2009 vintage loans. While it's true that all of the FHA vintage loans experienced increases in foreclosure beginnings in April, the more recent vintages from 2009 to current have experienced improved credit performances. Herb Belcher, the Senior Vice President for LPS Applied Analytics, explains that when the loan origination market basically dried up, the FHA tried to fill in. That is when FHA originated loans tripled, and even increased up to 5 times the averages in 2009. When you have high-volume loans like that, Belcher explains, there are going to be large numbers of foreclosure starts, even when you are working with low default rates, which is not the case during these recessionary times. In fact, the 2008 vintage loans by themselves account for approximately $14 billion worth of unpaid mortgage balances in foreclosure, and there is no end in sight. Other data for the month of April also indicates that foreclosure sales are staying low nationwide, dropping 2.6% in a month-over-month statistic. The sale of foreclosures in non-judicial states have also dropped 2%, and those in judicial states have remained flat, moving a small margin down of 0.01% in April. The total loan delinquency rate is currently at 7.12%, which is an increase of 0.4% for the month of April. As previous history indicates, Mississippi, Nevada, Illinois, New Jersey and Florida continue to house the highest percent of delinquent loans, while Alaska, South Dakota, Wyoming, Montana and North Dakota bring in the lowest percentage of late mortgages.